Hello and welcome to ProData Traders, your go-to podcast for deep dives into the Indian stock market's biggest movers and shakers. I'm Anjana, and joining me as always is our resident market expert.
Hey Anjana, super excited for today's episode. We're diving into a company that's been lighting up the power sector, transformers and Rectifiers India Ltd, or TARIL.
For those unfamiliar, TARIL is one of India's largest transformer manufacturers. Headquartered in Ahmedabad, they supply power, furnace, distribution, and even green hydrogen application transformers.
That's right. They've got a global footprint across 25 countries, an installed capacity of around 40,000 MVA, and they're expanding to 75,000 MVA soon.
Impressive, and FY25 was a blockbuster year for them. Let's unpack that.
Let's talk numbers. Consolidated revenue hit 2019 crore, up 56% year over year. EBITDA jumped 157% to 359 crore. Even more eye-popping, PAT zoomed 357% to 217 crore.
And EPS more than quadrupled to 12.70. That's serious shareholder value.
The margin improvement is the key story. EBITDA margin expanded from 10% to over 17.5%. That shows operating leverage, premium product focus, and better efficiency.
They've also got a massive order book, over 5,100 crore unexecuted, and 22,000 crore worth of inquiries under negotiation.
Exactly, and they're being very selective about the orders they take. They're focusing on high-margin contracts like the 740 crore order from Getco.
That's the biggest single order in their history. Plus, they secured 4,504 crore in new orders just in FY25.
It's all about strategy. Rather than grabbing every order, they're optimizing for profitability, payment terms, and scalability.
Let's talk expansion. Phase 1 of their new 15,000 MVA capacity kicks off this May. By February 2026, they'll add another 22,000 MVA for high-voltage transformers.
They're planning a total capex of 550 crore over the next 15 months. And here's the kicker: their goal is to be 100% backward integrated by Q1 FY27.
Wow. That would reduce input costs and improve margins significantly.
Absolutely. In fact, they've acquired a CRGO processing unit, which alone impacts 35% of their raw material cost. The management expects this to add 4% to PAT margins long term.
Last week, TARIL looked technically hot. Has anything changed since then, analyst?
Yes, there's a shift in sentiment: short-term caution, long-term strength. Let's break down the latest technicals from April 20th, 2025. Before we dive into that, make sure to subscribe to our channel. Your support motivates us to bring you more in-depth analysis. Short-term weakness emerges, closed at 530, staying below VWAP for 3 days, a clear bearish signal. A black Maribozu candle hints at strong seller control. Relative strength versus Nifty 50 and Infra has declined. CCI turns bearish, and stochastic %K drops sharply, indicating fading momentum. ATR falls 7.3%, pointing to lower upcoming volatility. But long-term bulls still in control. 1Y return 75.9%, 2Y 1,558.8%, 5Y 15,262.3%, still trading 104% above its 52-week low. Momentum scores 1M, 3M, 6M remain strong. Weekly super trend shows resistance at 583.90, sell signal active for 9 weeks.
So in short, the long-term trend still looks promising. But there's a cooling off phase happening right now.
Exactly. Think of this as a healthy pullback. Traders should be cautious. But investors can use dips to accumulate, especially around 500-510 zones.
Their chairman, Mr. Jitendra Mamtora, has set a bold goal: hit 1 billion revenue within the next 3-4 years. And FY25 marked phase 1 of that journey.
He's not just dreaming. The groundwork is being laid: tech tie-ups, backward integration, better governance, and massive infra scaling. They even aim for 3,500 crore in revenue in FY26.
Their Q3 and Q4 con calls also emphasize digital transformation, upskilling employees, and efficient working capital via the CPIR model: cash, payables, inventory, and receivables. On
the balance sheet side, TARIL is becoming a fortress. Total assets are now 2,047 crore, up from 1,129 crore last year.
They have more than 166 crore in cash now. Net worth has doubled to 1,180 crore. Debt equity is down to just 0.21.
That's a solid capital structure. Plus, they reduced short-term debt while boosting inventory and trade receivables, all signs of a scaling business.
Let's talk about what investors love: dividends and bonuses. TARIL announced a 20% dividend and issued 15 crore bonus shares in February 2025.
Governance is also strong. Leadership reappointments were made for the chairman, executive director, and MD with revised terms and board approval.
And the next AGM is set for May 13th, with voting eligibility on May 6th.
Another exciting piece: their work on green hydrogen and solar application transformers. They're aligning with India's renewable goals.
The company's agility in adopting green tech could make them a strong ESG bet for long-term investors.
And with such a strong base, they're poised to benefit from India's growing power demand and infra development.
So to wrap up, TARIL is one of the most exciting mid-cap stories in the power equipment space today. Strong growth, sharp margins, massive orders, and visionary leadership.
Absolutely. If you're a long-term investor bullish on India's infra and energy sector, TARIL is a stock to keep on your radar. Just a quick reminder: this video is for informational purposes only and isn't financial advice. Always do your own research and talk to a financial advisor before making any investment decisions.
That's it from us today. Don't forget to like, subscribe, and hit the notification bell for more deep dive market podcasts. And as always, stay smart, stay invested.